Hi, ladies and gentlemen. This is the Maestro here. It is June 22nd, 2017. And with me today is the Chief Market Analyst at ITM Trading in Phoenix, Arizona. Welcome, Lynette Zang.
Thank you very much, Brian. It's nice to be here today, and I'm really excited. A little bit about ITM. We've been in business since '95, and I'm quite proud of the fact that we have absolutely zero complaints against us in the Better Business Bureau. And I think that says volumes. I've been here since 2002, but prior to that, I was in banking, I was a stockbroker, and so I definitely have been groomed for this moment in time. And I'm never really good at taking anybody's word for anything. So I am on a mission. And my mission is to translate financial noise into understandable language because it's made intentionally complex so that you don't question it. So that's what my work is really all about, helping people, the normal person that gets suckered into this stuff, understand what they're doing so they can make educated choices.
Fantastic. Thank you, Lynette. That's wonderful. Lynette, can you share with us your view of where all of the markets stand as of today, June 22nd, 2017?
Yes, I can. Now, considering the fact that I have been in the markets on some level since 1964, I would have to say that I have never seen a market as rigid as this market is. And I was a new stockbroker on Black Monday in '87, so I know what that looked like as well. And that's definitely where we are right now. I've never seen this before.
When you say rigid, what do you mean by rigid?
Well, there's just not a whole lot of give. So if you think of it like a balloon, when you're first blowing up a balloon and you have, say, a dull pin, well, you can poke that balloon and it'll go in and out. But when you get more and more air in it, in this case, more and more central bank money and derivatives in it, then you can walk up to that balloon at some point, and even with that dull pin, it's going to pop. So when I see the markets not even being able to go down really 4%,
right,
that's really rigid to me.
So what does that to you spell fear? In other words, the signature of these markets, do you sense that's just plain fear of allowing the bubble to pop?
Well, certainly the central bankers have, well, here's the thing. I've been studying these markets for so long, and when you dig into this stuff deeply, what you think is a shock or a surprise, you discover was actually intentional. So you should never let a good crisis go to waste. And, you know, we're laughing, but actually to transition the money standard, which is what the IMF has been talking about for quite some time, they actually say we need a really big crisis to conclude that transition. So I cannot really say, the only reason I would think that the central banks would fear it is if they weren't quite ready yet with the new standard shift. Other than that, I think it's intentional. That's my opinion.
Okay.
Exactly.
So you mentioned standard shift. So where's this shifting? What do you think the end goal might be? Are we talking, is this a currency goal? Is this just simply a cyclical goal? What's the goal?
Well, okay, let me kind of back up a little bit to move forward because I've specifically been studying currencies since 1987. Mm-hmm. And, you know, I consider myself an artist. And as an artist, what I can see are patterns.
Right.
And so having studied currencies for all this time, what I discovered is like everything else, currencies also have a life cycle. I have a 2-year-old granddaughter and a almost 4-year-old grandson. And at 62, I'm in a completely different part of my life cycle than they are. And currencies are no different. So when we transitioned back in '71, for those of us that were alive then, you would probably remember all the chaos around that shift because the dollars pegged to gold when we were funding the Vietnam War, we were creating so many more dollars that peg, that currency positioning could not hold. So there's always, when there is a shift like that from one standard to another standard, you have war, you have in 71, you had civil rights, women's lib, the market dropped 45%, you had 37% inflation. So there's a lot of chaos around these shifts when the peg or the standard no longer functions. So we went from a gold standard to a debt standard,
right?
But it comes to a point where to service that debt, it's eating up most of our income. So we hit that peak debt in 90, or the ability of debt to stimulate the economy in 97. And everybody knows, we've been hearing for years that this is unsustainable, but it's not that it's unsustainable.
Right.
It's not payable, and they have no intention of paying it because the money is created from constantly compounding debt. So the system doesn't work anymore. And it really, it died in 97. And I mean, there's a lot to that. We had the Asian currency crisis, Russia, long-term capital management, which is when they knew that it was dead. But since the banks are in control of it, what do banks know? They know debt and they know leverage. So once they maxed out on the debt, basically in 97, I use the monetary velocity charts all the time. That's where you can see that.
Right.
Okay. So since we maxed out on the debt in 97, their next step was leverage. And that's where the speculative derivatives comes in keeping that leverage going. But they knew the outcome because they saw it in 98 and chose to, not put any regulations around it. So
if you had a bias where this goes and what standard we would move to, would it be, let me give you a few choices. Would you want to see a market crash? Would you want to see a reversion to mean? Would you want to see a correction? Would you want to see a reset? Give me a feel for what you and your bias, what would you like to see, let's say, within the next 5 years?
Well, frankly, I wouldn't like to see any of it having, grandchildren and children.
Right.
But I'll say I am 99.9% sure that there will be a war. That will be obvious. I mean, we've been in perpetual war since '89. We will see a major market correction. These markets are the only market that was more overvalued than this was the NASDAQ bubble. And that was as we were, shifting into the leverage. So we will see that, and we will see really, there are no buyers on the other side of this market. So whatever wealth is held in the system, I am 99% certain that it will remain in there. That means people will not have access to their brokerage accounts or their bank accounts. They may electronically because that's where they want to take us. And they actually laid this out in a template in the IMF in 2011 on how they would transition us from a dollar standard to an SDR standard.
Okay.
But the underlying of the SDR standard, I am really convinced, will be blockchain technology with smart contracts on top of it. So that's what we will be working for, our corporate self-executing contracts, if they can, if we'll let them.
Where does gold stand within the SDR?
Well, at the the IMF, presuming the reserves are there, have quite a bit of reserves in gold. At the moment, gold is not part of that basket, but they have discussed making it part of the basket.
Right.
That will not happen, in my opinion. It can't happen until all the debt is reset. Right? Because if they put it in now, it fixes the debt where it is and it's not payable.
Right.
And all the interest is compounding. So everything has to reset. And then, of course, all confidence will be lost. and then they will put a component of gold in there to stabilize the currency and rebuild the confidence of the public. That's presuming they can pull this off, which they may be able to.
So where's gold in that equation then?
Well, for the individual?
Yeah.
Okay. Well, right now the big push is to get everything in cyberspace so that you have no control.
Right.
So physical gold, which is the primary currency metal, and its most important function is to hold its value, hold its purchasing power. And physical silver is really, as we're going through that chaos, in my opinion, it's pretty, well, it's not the only tool because anything physical or any talent is also barterable, but I think you need to be prepared to barter. And gold and silver are universally barterable.
Right. Good
so
point.
That's where that fits. It gives you choice.
Right. Yeah. You and Bill Holter, I don't know if you know Bill's work, but you and Bill Holter, I think, probably are on the same page regarding that concept of bartering. Yeah. As you know, I focus on charts and patterns. What is your approach on a daily or a weekly or a monthly basis with charts? How do you use them?
Well, the way that I use them is not so much to say, okay, okay, that's a little challenging, so I'll answer it in two parts.
Sure.
First of all, if I'm going to look at what the trend cycle is right now, since I can't see any real price discovery because of all the money printing and all of the manipulations on many, many levels, to really understand where an individual company or ETF is at any given moment is kind of challenging because it's not real. However, having said that, it is a really good indication using the charts and the graphs for comparisons and also to see where we are. Can I show you an example of what I mean? Okay. So this to me is one of the most important charts that I follow, which is the VIX on the 10-year Treasury. Okay. And you can see over here where you just have the dashes. So there was pretty easy price discovery. And since the 10-year Treasury is the foundation of our system, yep, that would make some sense. But you can also see in 2008 when the system died, right, during the crisis, dashes became lines. And look at when the traders, when Wall Street took over.
So is the VIX dead?
It's on life support. The whole system's on life support for sure. You can see it. If this is an EKG, you know, how long this can go on. Right.
For full disclaimer, I entered a position yesterday and still holding it in UVXY, which is, you know, an ETF that plays off of VXX, I believe. And I'm convinced that we're close. And what I'd like to do is I sent you a couple of charts a bit ago, and I want to talk to you about the TLT chart, which is the 20-year Treasury, and TNX chart, which is the yield of the 10-year note. Here's what I'm noticing, and I'm curious what your analysis might be of those charts. Number one, on the TLT chart, and my subscribers are very familiar with my work on this chart, there's an inverse head and shoulders where TLT's price has just broken the neckline. A golden cross is fairly imminent, I'd say within the next couple of weeks. And I have analyzed the TLT chart in comparison to the S&P SPY specifically. And back in 2007, that it formed a death cross. I'm sorry, inverse. So there's a relationship between the two. My analysis confirms, or at least supposes, that we are within a couple of weeks of that golden cross on TLT, where it will continue to march upward. Money will continue to pour into that vehicle or vehicles like it, and there will be a lag time, but the S&P will come down soon. What are your thoughts?
Okay. I am not a short-term trader. That takes a certain kind of mentality.
Sure.
And I'm more of a long-term strategist.
Okay.
But I can definitely see the patterns in there. And the trend, actually, I think the trend is most likely to continue. So I would say that you're probably accurate on that. And also, as people become more and more nervous and they're looking for safety, okay, then all they know, all we've been trained to know is Wall Street.
Right.
Okay, so I would agree with that. I don't know. The stock market's just ridiculously rigid. I mean, it just is. So any kind of black swan event, it's not going to be something we know about. But yes, but it'll be interesting to see if it will make it more than 4%. Because of 4%, you've got Deutsche Bank insolvent. You've got a bunch of the banks insolvent below 4%, or more than 4%, I should say.
And margin calls?
Oh, tons of margin calls. Yeah, I mean, they're highly leveraged. And what about all the derivatives on top of it? I mean, that's really the big problem. I know the stock market's gone up, but it's not really the growth in the stock market or the growth in the bond market. It's the growth in the derivative market.
Right. Thank you. I have a few questions from some of my subscribers to you specifically, which is that's really neat.
It is neat.
Yeah, JM Carp. Yeah, JM Carp 98 asks, when will we see an equities correction or crash?
Well, let's see. I do have a couple, crystal balls on my desk.
Right.
Part of the problem is we're not living in normal markets. I mean, in normal markets, things go up when volume increases. In managed or manipulated markets, that goes back to what I was saying. I would have thought they couldn't have held it together this long.
It's actually impressive to some degree, right?
You have to give them credit. They're genius.
Right.
And look at the apathy that's in the markets. I've never seen it this extreme either.
Right. Secondary question after his question. I've always maintained that the big bankers aren't going to pull the rug until maximum euphoria amongst people like ourselves occurs. I talk to my friends, again, just, regular middle class folks. They're not even interested in the markets. Either they're passive investors or they stopped in 2008. What are you seeing?
That's exactly what I'm seeing. And that's what I'm saying. The apathy in the markets. People are just like, yeah, they can just keep doing this forever. No, they can't. And nor do they want to. That's the other assumption, is that they want this to keep going. Well, they only want it to keep going until they have all of the rest of the mechanisms in place. And they've changed a lot of the laws. I think with what the president is now doing with deregulation, that's going to unleash this next big push of leverage into the markets. And yeah, because of that apathy, people either do the passive investing. Oh, I just keep putting money in the 401k, my IRA. They're not nervous. They should be. I'm scared. I don't think we can really last until the end of the year, but.
Well, after the 2008 dip, I avoided a 60 to 80% loss like a lot of people did. And bought back in. The Dow was at 7,500, and I told myself at 15,000, I'm done. I'm out. And look at the move that I missed.
Yep. Well, see, that's the thing, and we get suckered in to, oh my goodness, we missed a move. But truthfully, I have a graph that really shows it really well.
Great.
Wait, I have to just think of where I put it because the boys were here and kind of moved my stuff. Okay. This is a stock chart on Venezuela. Let's see. Should I hold it up closer?
Perfect.
And you can see, here's all your euphoria. Everything is great. And then there's no buyers on this side of the market.
Right.
So, that's what no liquidity looks like.
Right.
And that is a very typical pattern. But people think they're gonna know right then, and then they're gonna get out, and then they're gonna turn around and buy gold when it's,
Now,
I mean, I can't do that.
Right. That looks like a reset of some kind. Did anything reset in inversion to that chart?
Well, actually, Venezuela is in the middle of their hyperinflationary event.
Right.
So in 2011, they did a monetary gold confiscation.
Okay.
And then you see, so people were trying to flee the currency, and that's what happens, right? So they rush to the stock market because they don't know, they don't have any other choice, or they don't know. In this country, we don't think we have another choice.
Right.
Right? So the wealth goes in there, but this is when the insiders get out.
There was nothing the regular person had nothing to hedge that down move with.
No.
Okay.
Interestingly enough, though, when I did my research on it, and even we had some recent experience with it, while they confiscated the monetary gold, they did not confiscate the collectible gold. So right now you have 90% of the population in abject poverty, not 100%. And we had somebody send up some collectible coins to liquidate that live in Venezuela. So that's how you hold your money, and that goes back to that other question.
Okay, well let's I'll have a few more questions from subscribers in a little bit, but let's go ahead and segue into that. Explain what you and your company, how do you operate? I understand ITM trading, and you've got a phrase after that you use in all of your videos. Could you explain that? And you know, we may have some subscribers that might be interested and curious about what you do.
Absolutely. We are a physical full-service brokerage house. So in other words, we have wholesalers that we buy from. So it's not like we have everything in-house and any of our brokers have to sell whatever we want them to sell. So our approach is very strategic, and we look at what the client is trying to accomplish, and then we build a portfolio to support those goals. And that could include silver, it could include gold, but we really it's really a consultatory approach where we want to really know, what are you trying to do? What are your circumstances? What do you have to work with? And then what supports those? That's what we put first, is the client goals.
Okay, since we're on the topic of gold and silver, what are you seeing in those charts? Are you seeing a new bull, beginning of a new bull run? Are you seeing, like I'm seeing in silver, a cup and handle? We're in the handle right now. What are you seeing?
Okay, there's a few interesting things even going back to the charts, and that is, again, it's so heavily manipulated. Looking at the short-term charts, it's definitely in a positive trend line. But the piece that people miss, and I think this is critically important, is here's one guarantee I'll give you. At some point, every asset and every instrument goes to its true value, its fundamental value. There's a little bit of nuance in there because you have to determine, okay, well, why was this created? What's the single most important thing that this was created to do? Not for you, not what you want, but what the creators wanted. So for gold, gold is the primary currency metal, and we needed a way to value and store labor. And gold is labor-based and finite and divisible and all sorts of things that made it evolve as the primary currency metal. So you can look at the charts and all of that, but we also know and have lots and lots of evidence on the manipulation by the central banks and the commercial banks and lots of levels of bankers, because a rising gold price is an indication of a failing currency. So when it was close to breaching 2000, oh my gosh, that was not good. And that's when they started to really whack it hard. Now, having said all of that, that goes to, well, what is the fundamental value of gold and how can you possibly get that?
Right.
Now, again, it's nuanced, but in the system, money's created from debt. And most countries, including ours, don't publish how much new money they're printing. So you can use debt as a proxy for how much new money there is. Mm-hmm. And with gold, there is a finite amount of it, whether it's in the ground, whether it's above the ground. So I'm not going to get you to the penny, But this is how I come up with the fundamental value of gold. Because at some point when they do that reset, the way that they do it is they revalue the fiat money, the government money.
In gold?
Against monetary gold.
Okay.
Okay. And then gold rises to its fundamental value.
So would that be in a form of a ratio?
Well, what we won't know until they do it is what that cover ratio is going to be.
Okay.
Okay. Nobody's going to know that. So what I use is just the global debt clock because it's easy for me to pull up.
Right.
Right. But that doesn't cover all of the debt. According to the most current study by the IMF, it's about 3 times what the debt clock is showing. So I consider this to be very, very conservative because I also take into account in-ground gold, which of course they wouldn't have access to. So that means that that I believe, without a doubt in my mind, that if they were going to do the reset today, we would see gold go somewhere north of 8,900 conservatively, and silver go somewhere around, $600 an ounce.
Right. And that ratio is?
Well, that's just based on public debt alone and every ounce of gold that exists.
Okay.
So it's conservative.
Interesting. Now, wouldn't that benefit? I mean, not only, the standard human being, well, I shouldn't say it would benefit the standard human being if they're not holding silver or any kind of, gold or precious metal, but if let's say, Trump was voted in, I'm just kind of walking on a path here, some theory that I'm thinking about. Trump's voted in by this new silent majority, people who didn't want to be polled or answer that they were going to vote for Donald Trump. So Donald Trump is installed. All of this hastening of what he wants to, not really sure, frankly, what he wants to accomplish, but you've got both sides of the aisle in the legislative, which really is one party, in my opinion, holding him back. You've got the media as another arm holding him back. Supreme Court, who knows when they're going to enter the fray here. I think that, at least the court system's holding him back to some degree. What could he do to say enough is enough? He said the stock market was in a bubble. You mentioned that he likes actually now. I don't know if he just switched gears but he seems to be pretty happy with our policy right now. What are you seeing?
Well, this is my personal opinion, and I really don't get political because I'm 100% convinced it's the bankers that are really driving this bus.
Okay.
But I do think that he knew full well what his job was coming in, which is to, piss everybody off in the world, so that they can justify transitioning the dollar as the world's reserve currency to the SDR, and to create inflation so that even though the inflation will really be coming from the IMF, the finger will be pointed at Trump, the infrastructure, the lack of regulations or the dismantling of regulations and all of that. So I think his job, and I can't prove it, and I'm data gal, I like to be able to prove it.
Right.
But I've been following his career for many, many years.
Right.
And I think his job is to take the fall and have somebody to point the finger at.
Do you think, and in other words, is he willing to allow this to be hung around his neck?
I think so. I could be wrong. I don't know him personally.
Well,
we've never had a conversation. But he is probably one of the best opportunists that I've ever witnessed in my life. So I think he knows what he was getting into. So there's maybe not 100%.
Okay.
To a degree.
So there has to be then some kind of plan for the other side. Right. Wouldn't you think?
Yep.
I'm curious about what that would be. Any prognostication what that plan is other than you think we're going to SDR?
Well, probably the same kind of plan that's been in place every single time, which is wealth transfer.
Okay.
Because even thinking back to 2008 with the real estate, right? This is who got hurt? It was the taxpayers of the middle class, right? So I didn't pull those charts, but I can tell you from the data, and and maybe I'll send it to you and you can post it if you want. Central banks are buying gold hand over fist, except
Right.
apparently for the US. Okay. And the ultra wealthy are buying collectible coins that are in the hundreds of and millions of dollars. So why would they be and other tangibles, not just gold, but a lot of it. So why would they be doing that?
Right.
Because then you have your wealth when this happens, and you can pick it up for nothing.
So so right now they're buying cheap metals for a time later to sell expensive metals.
To convert into those severely undervalued assets. And just to point out a pattern on this one, although usually the charts aren't quite this clean, but you can see this is a cup formation.
Right.
Right? So cup formation is a really powerful accumulation pattern that indicates big money has identified an undervalued asset, and they're really quiet when they accumulate. Or they even might put that out what a bad thing it is to do.
Right.
So that's why.
I have another couple of questions here from subscribers. Yasmin Sahara asks, considering the decline of the petrodollar, what would be an advisable portfolio moving forward?
Okay, everybody must do what they're comfortable doing. And since this is where I have really lived my entire life, and I've seen patterns in, not just gold, but the collectibles, so the physical markets as well. I personally believe that most of your wealth should be held in an undervalued asset that is in a long-term positive trend, because I'm not a short-term trader, but a long-term positive trend, and the least amount of your wealth in an overvalued instrument that is in a long-term negative trend.
Right.
So for me personally, with my level of comfort, it's food, water, energy security, and then barterability and wealth preservation. My investments are in gold and silver, but I have those other bases covered.
Right. Okay, thank you. Another subscriber with the name Kicking Geese asks, what is the Fed's intention? To unwind more QE? What do you say?
I'm saying more QE. No, and I could be wrong because obviously it's not within my control. But just the runoff of them not buying more treasuries, so the interest and the principal payments, funded 40% of deficit spending last year. So can they stop that? What happens to the deficits? Does that mean that the government issues even more debt? And since the central banks are the buyers of that debt, who's going to buy it? Pension plans, the little guy, mutual funds. So I don't see how they can do that. And on the mortgage-backed securities, 2 years running, they bought 30% of the new issuance, 30% from the runoff. So what happens if they stop? And they own 24% of that total market.
Right.
So how can they not keep supporting it? So that means more QE.
Right. One other question. Rod Brumley Sr. asks, palladium is close to platinum in price. Why is it closer to its all-time high, but gold and silver lag far from theirs?
Well, number one, with both platinum and palladium, it's used quite a bit in the automotive industry.
Right.
And you know that the selling of cars have been on a tear, a lot to subprime borrowers, and they've securitized them. But it looks like that trend is now shifting. But that would be why you would see platinum and palladium near highs versus gold and silver near lows, because again, a rising gold price is an indication of a failing currency. So buy cars, stay in the stock market, and don't protect yourself.
Right, right. So, but what's interesting about that question, a secondary question, is, silver is used in industry, in particular solar. Of course, we know that, solar is not cheap to manufacture still. You'd think by now with all the hollering, about solar, someone would come up with a process that is profitable. Apparently not. So silver is affected. Is silver the stepchild of gold, just pure and simple?
It is a secondary monetary metal. And yes, one of my personal bugaboos is when people will say that gold and silver have no intrinsic value. Well, that's garbage because, as you just pointed out, actually both of them are used in every aspect of the economy.
Right.
Dollars are used in one place.
Right.
Right. So gold and silver, that's one of the reasons why they have all intrinsic value. That's why they hold their value.
Right, right. One other thought. The Dow Jones is still well above its major moving averages. However, SPY is just, of course, the ETF SPY is just below its 20-day moving average. The S&P is just barely above its 20-day moving average. The Russell is at the 20-day moving average, and the NASDAQ is just below the 20 DMA. Are we seeing a rollover, but we're not seeing that yet indicated in the Dow?
Well, you could be seeing a rollover, especially with what's been happening in the NASDAQ. I don't think we're seeing it yet in the Dow. There is a big divergence there, but I think, again, if they can keep it floating, if they are not ready for the crash yet, even though that's below the 20-day moving average, we just have to pay attention. It's going to be something out of the blue that nobody
anticipates. It has to be, right?
Yeah, like Lehman. Now, that was my alma mater, right? So I'm watching this, like, no way. They've been around for 125 years. There's no way they would do that. That was a black swan event. It's something that you cannot imagine that would happen, that happens, and then it was out of their control and scared them the day the system died.
So given your experience and given you've seen these events occur, as you call them black swans and others call them black swans, give us maybe 3 potential black swans, either worldwide or stemming from somewhere within the United States itself?
Oh gosh, take a pick. You know, just look at all of the terrorist activity that's been escalating more and more frequently, and we've become apathetic to it.
We have.
We have. So I think anything can come from with that. Look at North Korea. You know, so there could be a war on the horizon that we don't see. And that's the thing. It's something that we cannot imagine would happen. That's what the black swan event is. So it's kind of hard to call because you can't even imagine that that would happen.
Sure.
And that's the population. They can't imagine the dollar would go away.
Right, right. I'm feeling North Korea is coming to a head sooner than we might realize. And whether it's going to be some kind of covert activity, apparently Kim Jong-il or whatever his name, I can't remember his name. Apparently he's now nervous that it's going to be the United States is going to conduct some kind of operation. It'll be covert, similar to Osama bin Laden. Thoughts militarily on a regional war?
Can you imagine what would happen, particularly with Russia and China, okay, and the U.S.? So, yeah, that could certainly be a good catalyst that they want and need. I mean, you know, it's just that every time there is a money standard shift, you have a war. And the first time we had a world war was right after we installed the central bank system. I don't think that's a coincidence.
Right. Is this World War III then?
Yeah, I can't guarantee that, but yeah, I think so.
Yeah, I'm afraid that we're weaponized to the point where nation leaders will not hold back, unfortunately. One last question. Peter Schiff is very pro metals, regardless where the crash occurs, and in particular when a crash does occur. Harry Dent, on the other hand, is not. He is fairly alone in that room. And the one thing I'll say, I'm afraid to be in a room that's too crowded. And it seems like the room that's crowded is the Peter Schiff side. Harry Dent's in his own room. Is he right?
I don't think he's right. No, because what else can you hold that can protect you. If your wealth is in the bank or the stock market or in an annuity or any other fiat money product that they're generating fees from, and they push a button and they say, no, you have no access to it. Here's a pretty statement that says what you have, you just can't touch it. What good does that do you?
Right.
So
you're talking about even if he was right, you can still barter in this situation where you can't access your brokerage accounts, your bank accounts. You have maybe no online access, but you still might have some physical metals to go down to the farmer who has eggs or a side of cow and maybe even land, and he's willing to barter with you because he needs that tractor. He needs to feed. And he doesn't have the ability to do that, but unless there's something that the other neighbor has, it sets the whole derivative, right? It sets this whole chain, and now you have a brand new bartering system. So to me, I think, irregardless of whether Harry Dent's right or wrong, ultimately we need to have something physical in our hands as citizens so that we could survive hopefully a brief period of time without things that we consider basic needs like the computer.
Right, because there is some kind of, if the grid goes down, and I think that is, many think that's a really strong possibility,
right,
then, things are going to go real local for a minute or two. And the difference between, people will say, well, I have this or I have that. The difference is that gold and silver are universal, right? So I don't have to, if I have strawberries and you have blueberries, but I'm allergic to your blueberries and you don't want my strawberries, I have to go find somebody that wants what I have.
Right.
Whereas with silver or gold, it's universal.
Right.
100% of the time, you can always convert gold and silver into any good, any service, or any currency. You cannot always convert a currency into any good, service, or gold or silver.
Right.
And I should ask you, do I look like a farmer to you?
I hate to answer these questions because I don't know what a farmer looks like, but I guess no.
Okay, that's a good answer. Well, I've become an urban farmer. So that because food is like the biggest issue with people. So I do have eggs that I can barter with, and I have tilapia, and I have all of those things, but I never planned on being a farmer in my life. I will tell you that. Never planned on it.
Well, thank you, Lynette, for sharing that. This has been a fantastic opportunity to speak with you and get to know you. And I suspect that not only my subscribers are going to enjoy this conversation, but I have the funny feeling that we're going to see this interview other places very soon.
Okay, well, that would be wonderful, and I really appreciate the opportunity too. This has been a lot of fun. Can I give our phone number?
Yes, go ahead.
Okay, it's 888-696-4653. And I will say this too. I've been at ITM Trading since 2002. We are a team here. And for anybody that's met Eric, when we do the Q&A, we all try and really take good care of our clients together. And everybody here has been here, well, not everybody, but almost everybody has been here for a really long time, like 5 years, 8 years, 10 years. And we all pay attention. So we all support each other, and it's a great company.
Well, it sounds like a great model, Lynette. Thank you.
You're welcome. Thank you.
What's your website one more time?
It's www.itmtrading.com.
And your YouTube?
Is, I just always Google ITM Trading. Oh, they gave me a list because I'm not good at this.
Go ahead, I feel like, and I'll post it.
Okay, the YouTube is youtube.com/ITM Trading. It's the Facebook is facebook.com/ITM Trading / and twitter.com/ITM Trading.
Great. Lynette, thank you for joining us today.
Thank you for this opportunity. It's been fun. You're doing a great job.
Well, thank you very much. We'll talk to you later.
Okay, bye-bye.
Goodbye.